Thank you again for joining us. This is Stephen Aquario of the New York Association of Counties. Welcome to the NYSAC Purchasing Card Basics webinar in partnership with PFM. PFM was the approved company to partner with the New York State Association of Counties through the NYSAC Board of Directors. This program is part of a series of programs and services offered to the membership of the New York State Association of Counties, and in this particular case, also to other municipalities within New York State, in particular town governments. This is part of a series of programs, as I mentioned. The first was Workers' Compensation Program, which the association launched 2 years ago, and a successful program for your workers' compensation needs through PERMA. We also had a healthcare program through PROACT, and a pharmacy benefit management services program, and a community RX card. Next was MEGA, our electricity and natural gas supplier, which has been very successful. The next program that we have offered is Cybersecurity Trusted Purchasing Alliance, which provides cybersecurity products through your internet and to protect your data encrypted in your county programs and services. And finally, there will be another offering in the fall of 2013 for a credit card program for public use. That is not for purchasing, that is for the public purchasing public services through your landfill or to pay your taxes. This would be a program where there will be no fee for the public to use the credit card. So it's a pleasure to launch this program here today on our purchasing card. This has been a very exciting program for us, and I want to reinforce that this program is not interested in banking services. So the relationships that the counties have with their existing banks, this has nothing to do with banking services. So we wanted to make that clear up front, that the banking services that will continue for the counties and the services that they use, this is for purchasing programs and to maximize the rebate that is tied to purchasing. What we have discovered here at the association is that New York is behind the nation in the use of purchasing cards, and as a result, we are leaving cash on the table, if you will. The state comptroller has approved the use and encouraged the use of purchasing cards as a way to streamline audit purposes to track local expenditures. We're very pleased with this program that we have put in place here with PFM, and in particular the minimum spending thresholds that are tied to this program, which you'll learn about a little bit later today, versus some of the programs that are on the street right now, and also the applicability to large ticket items, which counties typically use for several $100,000 purchases. They would also be eligible through this program, and that is also, again, not available through other programs that are currently in existence. So we have a unique nature with this program, and we have designed this program, as you'll hear a little later today, to maximize customer service. That this is not a program that just fires out a high rate and leaves it up to the county to figure it out. Rather, this is a program that wraps around customer service and grows the program in a way that's never been done before in the state of New York, and we're quite pleased with this approach. I'd like to conclude by saying this is also a program that has been publicly bid through Orange County, New York, and now through that publicly bid contract, it is available to towns, cities, and counties by way of a piggyback contract. So we did want to report that it was a successful vendor selected in Orange County, New York. With that said, let me introduce for what will be approximately 40 minutes to 45 minutes on today's webinar, let me introduce William Sullivan, the Managing Director of PFM, for some brief remarks. Bill, are you with us? Okay, while we are waiting for Bill, let's see if Kelly Smaldone is available. Okay, while we're waiting for the presenters, let's just take a minute here. We'll see if we can't get them on the line and check and see if they are logged in here and able to connect by us. So stay on the line, please, and we'll get right into the presentation. Kelly Small-Joan, are you with us through PFM?
Yes, I am.
Okay, so Kelly, what we have done here is describe the type of program that we have, why it's unique in its offering in New York State, and at this point in time, we'll go right to you, and we'll go right through the walkthrough of this presentation. I've informed the participants in today's webinar that we'll go about 30 minutes for your session here, and then we'll go right into take questions and answers. So let me remind the participants here, if you have a question, please submit your question in writing through the question box on your screen, which I believe should be on your right side of your screen. Please, at any time throughout the presentation, please submit your question, and we will answer those questions either during the presentation or immediately following Kelly. So Kelly, let's go right to you.
Okay, and Steve, I just wanted to make sure that everyone knew that Bill and I were on. As a matter of fact, Bill was trying to speak. He's on audio only, unfortunately, because he was not able to join the webinar today. But he is having difficulty speaking, so that's why I guess you didn't hear him before.
Okay,
is there anything
Kelly,
that I can tell him?
No, not at all. Just go right ahead into the presentation.
Okay.
Kelly.
Okay.
Kelly, you're the presenter now, so you have the slideshow.
Okay, perfect. Okay. And yes, we are going to be talking about the purchasing card basics today with the P-card program. A purchasing card, for many of you out there who are not actually utilizing a purchasing card program to date, we're going to give a little bit of an overview on that. So yeah, it is a purchasing card. A P-card is a type of commercial card that allows organizations to take advantage of the existing credit card infrastructure to make electronic payments for a variety of business expenses for your goods and services. In the simplest terms, a P-card is a charge card, similar to a consumer credit card. However, the organization must pay the bank in full each month, and the organization has the ability to set a wide variety of card controls where necessary. So you could put all different types of blocking on your cards, merchant category code blocking, how many times in a week or a day you would like your cardholders to use their card. You could also set a monthly credit limit on the card. So there are an abundance of different card controls that you could put in place. P-cards are also known as procurement cards, pro cards, payment cards, purchase cards, or similar terms. Organizations that use P-cards come from the government, education, and corporate sectors and are often called end users. The individual employees who are issued a P-card to initiate transaction payments on behalf of their employer, the organization, are known as card holders. P-cards are not limited to plastic cards. They can also take the form of a non-plastic account number. The term card is typically used within the industry when describing any type of commercial card product, regardless of whether or not a plastic card is issued. Typically, the type of cards that you would be using, are a traditional card with the cardholder's name and the county's name embossed on that card. The NYSAC Payment Solutions Program is a cost-free payment solution for the county to streamline the purchase of supplies, services, service contracts, furniture, construction, utilities, and much more. Like Steve touched on before, You know, this service will create substantial new efficiencies for the county, and the bank's premier web-based integrated payment solution, details online. You can manage all of your card transactions, as well as you would have the ability to import your general ledger coding into the online environment, as well as exporting that out into your accounting software. It is a web-based reporting system. It offers multi-level access for administrators, managers, auditors, and account holders. There's over 100 standard reports, as well as ad hoc reporting capabilities with varying levels of transactional data and merchant details. Participants in the NYSAC Payment Solutions Program receive cash rebates on their purchases when total annual spend during the program year from September 1st through August 31st equals or exceeds $50,000. Now, what is different about this program as opposed to some of the other programs that are out there are we had one city, the city of Fargo, as a matter of fact, who was on a Wells Fargo program, and they spent $2.7 million on that program but never received a rebate, which you would say, well, that's unusual. Why wouldn't they? Well, that's because Wells Fargo's program starts at $3 million or more. So unless you get to the $3 million in spend, they didn't achieve a rebate. They moved over to our program, and just in the last month alone, just 1 month, they spent almost $1 million on their card program. And another thing that we do that the other banks don't do is that we help you grow your program. The banks honestly don't have interest in putting in the effort that we put in to help you grow it. So we want you to achieve the highest rebate that you possibly could. And again, the service is available statewide at no cost to the county. Purchasing card program highlights. Well, there's no annual card fee. Credit limit and card controls are set by the county's program administrator. It is a MasterCard-based platform, and it is accepted at over 8.6 million locations in the U.S. You have a dedicated support team. So not only do you have NYSAC behind you, you have PFM, and you also have the bank support team behind you. You have 24/7, 365-day access to the online environment. Again, you have over 100 standard reports and ad hoc reporting capabilities, so you could customize your own reports. The online system also offers level 1, 2, and 3 addendum detail, and I'll get to that slide in a moment that describes that in a little bit more detail. This is a central billed corporate liability program, so each individual cardholder does not pay the bill. The county pays the bill for all of the cumulative total of all of your cardholders combined. So it is the cutoff of the month is the 27th day of the month, and then you would have 7 grace days that are offered. So you would pay your bill 7 calendar days after the 27th of the month. And you would know on the 28th day of the month exactly how much your bill is, all combined for all of your cardholders. There is 0 liability for lost or stolen cards. You also have the advantage of having master coverage for employee misuse. If you have 5 cards or more in your program, you have $100,000 coverage per cardholder per incident. If you have 2 to 4 cards, you have $25,000 coverage for misuse. Now, talking about level 1, 2, and 3 data, this is your transaction addendum details. So on a level 1 merchant, when you go to that merchant and you get a receipt for anything that you've purchased, it'll say typically the date, the supplier's name, and a dollar amount. A level 2 merchant would also supply level 1 plus sales tax and a variable data field to assist with reconciliation. A level 3 vendor is someone like Home Depot, where you're actually going to get level 2 data plus item product code, description, quantity, unit of measure, price, tax. You would see you bought 5 rolls of duct tape. You would see that you bought 25 sheets of sheetrock if you're doing, you know, a construction project. So that's the, you know, different levels of data that the vendor actually passes. And depending on that level of data, all of that data is populated into your online environment. So you would actually be able to drill down into each transaction and see that. If for any reason this was used for a hotel, you would actually be able to see if, you know, someone rented a movie at the hotel when they stayed, or if they used a minibar. So, you know, there are different levels that you could actually drill down into within the online environment. Some pretty nice statistics, purchasing card opportunity and statistics. Based on a 2010 research conducted by RPMG, organizations can realize cost savings as follows. You can reduce the cost associated with a traditional purchase order process from $93 down to $22, or a savings of 76%. Of course, speaking to that a little bit more, you can certainly keep your current PO process in place. You can actually use this program as a payment vehicle, not just on the front end to use it as a credit card for a purchase at point of sale, but you could also just pay for invoices that hit your accounts payable desk. So you could go through your traditional purchase order process if you chose to, or you could actually set maybe a limit. Let's say you wanted to put a limit that anything under $1,000 you don't have to submit a PO process for and go through that whole thing. Or you could certainly, like I said, you can keep that in place. It also reduces the cycle times by 12 days or 72%. You can reduce the number of suppliers maintained in the AP master file on average by 16%. Let's say you realize that you're actually utilizing 5 different vendors for paper. And when you run the detailed reports out of the online system, you see that you're using all these 5 different vendors for paper. You could actually negotiate with your vendors to get a better price by telling them that you're going to select them as the primary vendor for your purchases of paper. So there are, you know, definitely a lot of reporting features within the online environment too that you could use to help you get better negotiated payment terms with your vendors. Now, something very important to highlight on the bottom of this screenshot is based upon an IRS ruling, public sector organizations can eliminate 1099 reporting as of January 1st, 2011, when transactions are paid for with a P-card. So if you are paying them today by check and you're issuing 1099s, if you paid them by card, you would no longer have to do that, because it is now the responsibility of the credit card companies to report that to the IRS. So that's a nice feature as well. Some trends in purchasing card spend. Estimated P-card growth overall in North America, it's in 2014, it's going to be $255 billion. So this is growth rates based on 2009 as the base for this this survey. So that's good to know also that everybody's pretty much getting on the bandwagon to start using a payment solution as opposed to paying by check. Some of the benefits for cardholders: it's an alternative and less expensive method to make purchase payments. No purchase order or requisition process necessary. Again, you can keep that process in place, so you do not have to do away with that. Faster delivery for goods and services, reduction of paperwork on your end, lowering processing costs per transaction, because you're going to eliminate check writing, check reconciliation. Obviously, you're not going to eliminate all of the vendors that you pay by check, but you're going to reduce that tremendously. And, you know, it will definitely reduce the paperwork on your end, lowering processing costs per transaction. You're not going to pay reconciliation fees, for the purchases that you make on the P card. You have the ability to receive discounts from net payment terms from your vendors, like I said before. The opportunity to earn annual cash rebates on your total annual spend. You're not earning anything today when you pay by check. It's costing you money. You have more information on purchase history and enhanced reporting capabilities within the online system, which again, you can export into your accounting software. You can limit the need for petty cash. You have the ability to set internal controls, merchant category codes, dollar and transaction limits on your card holders. And also for your suppliers, they receive payment within 24 to 48 hours of submitting the transaction to the bank. The result is improved cash flow on their end, and they get paid within 2 days versus typical 30 to 60 days. But again, you could still keep them on the, when you receive the invoice and then pay them. You can keep that process in place as well. So you don't necessarily have to use the card up front. They can also streamline their administrative functions via elimination of invoices and the consolidation of receivables. And of course, they meet the requests of the counties, and it differentiates them from their competitors, and they build better partnerships with you. So it increases their sales revenue. Also, there's actionable information reporting. So there's enhanced merchant reporting as well within the online environment. And again, you have 1099 reporting, but you're no longer responsible for reporting that. So that's good. You also have minority women-owned business reporting and other socioeconomic reports that you can run. There are also reports designed to eliminate all types of applicable tax and point of sale, only when level 1 data is available. So again, if they only supply level 1 data, which is the minimal amount that a vendor can supply. And you have ad hoc reporting capabilities like we said before. What does PFM Group add? How do we add value to the county's program? Well, not only are we a support system to NYSAC and what NYSAC provides to you as counties, but we also provide sample policies and procedures manuals. We also provide additional support to program administration through presentations and webinars such as today. We also provide quarterly spend reports with projected annual spend and rebate, plus your next level spend and expected rebate. So we actually give you little quarterly updates on where you're at and how to get to the next level. Sometimes we have counties just shy of the next level up on the rebate grid, that if they just spent, I don't know, maybe $1,000 more, they would pop into a new basis point percentage tier and they would earn even more. So we like to send those out to you and let you know where you're at and how you can get to the next level. We also provide P-card newsletters. We provide targeted mailings throughout the year to highlight best practices, which will help maximize the value of your program. And again, we help you grow your program. That is one of the biggest advantages for this program for you. And we also send out email bulletins on current P-card changes or initiatives and updates to the DOL environment, which is your online environment. And again, one of the P-card emails that we had sent out was to our existing client base back in January 1, 2011, that they no longer had to issue 1099s to their vendors, so they were very happy about that. Again, what makes the NYSAC Payment Solutions program better than other programs offered? NYSAC and PFM are pleased to offer the New York State counties a rebate program that is quite unique and extremely easy to calculate compared to those offered by our competitors. Our program does not incorporate calculations which include the likes of average transaction size, file turn days, large ticket transaction size, average large ticket transaction size, average spend per card, minimum spend per card, or other qualifiers, which may, have an impact on your rebate. So the other banks that are out there offering this, they definitely have what's called large ticket transactions and some of these other qualifiers that will have a negative impact on your rebate. So at the end of the year, you may not be able to simply say, okay, on my grid, if I spent X, this is what I would earn in a basis point percentage, because you really wouldn't know. You might get a reduced rebate percentage on those large ticket items with another program. So you wouldn't be able to calculate that at the end of the year. There could be a lot of gray area. With our program, all of your purchases combined, so you'll know each month you spent $10,000 a month or $100,000 a month. By the end of the year, you'll know exactly what you spent. You'll be able to look at our rebate grid, know exactly the basis points percentage that you've earned, and know exactly to the penny the rebate check that you're going to receive at the end of the year. There's no gray area. Your rebates are based on a cumulative net transaction volume for a 12-month period, less credits, cash write-offs, cash or fraud write-offs. In addition, you have the added value and support of the bank's world-class client services department, PFM's exceptional customer service, and NYSAC's unwavering support of its counties. There is also an additional service offering that I'm not going to go into detail today, but we did want you to know that it is available for later on down the road after you become, using the NYSAC Payment Solutions program. This is another additional service offering. It's called Approved to Pay, and it is a buyer-initiated payment. And what that is it's an enhanced payment vehicle for you to pay some of your vendors that don't accept card. So that's why I'm saying that we're not going to go into detail about this today, because first the first line of defense would be to get all of the vendors that accept card utilizing your card and accepting that. So that's your first line of defense. After we've determined who out of your strategic vendors don't accept card, then we would move them on to the buyer-initiated payment type of vendor payment. So it is a little bit different, but it is also a different rebate schedule for this particular program. So that's why we're not going to go into detail about this today. But your other rebate schedule is clear on what you would earn on whatever you pay your vendors utilizing the P-Card program. And now I'm actually going to send this back to you, Steve.
Okay, Kelly, thank you. This is the point in time, and well done on the presentation. This is the point in time where we will take questions. Again, to the participants on this call, and there are many of you, please submit questions in writing, and we will answer those. We do have several questions to start with here that have come in, Kelly. So, again, while folks are sending in additional questions, let's start with this one. The question is, are any goods and or services exempt from the program? So let's take that question and then let's expand on it a little bit with a twist here, Kelly, to say how does the government, the county, add vendors to, if they're existing suppliers or vendors of the government, how does PFM add these suppliers or vendors to the card program itself? And then you could also answer the question, are certain products exempt?
Okay, certainly. We would actually, once a county decides to join the program, we would do what's called a vendor scrub. Can everybody hear me?
Yes, they can. Please go right ahead.
Okay, perfect. Okay, we would do what's called a vendor scrub. So we would actually get a copy of all the vendors that you currently pay today via check. We would get a copy of that. we would send it up to the bank, and the bank would do an analysis to let you know, out of your vendors that you currently pay by check today, how many of them are already accepting MasterCard from someone else. So we would know who to target for you to bring on board. And also, if there weren't any, which is highly unlikely, but let's say you had a few that don't accept MasterCard, the bank can actually negotiate with the vendor to see if they would take the card, to show them what the benefits would be to them as well as to the county. So we can help get any vendors on board that aren't already. But it is highly unlikely that there are very many vendors that you pay today that don't accept the card. Some utilities take it and some do not. So again, you know, in that case, we would have to go to the utility and see if they actually take the card. If we determine that via that vendor scrub, then you're good to go with paying them by card instead of check, which would greatly increase your rebate. And I hope that answered everybody's question.
Okay, the next question that's come in here is that the county uses a voucher system before a payment is made to a supplier. How does this program reconcile with the county's procurement process? Does it have to change, or can the county continue to use its purchasing or procurement process that they have in place right now?
That's a great question, and like I mentioned before, yes, you could certainly keep your existing process in place. You do not have to necessarily use this card up front for purchases. You can use it as a payment mechanism on the back end. So if AP is sitting there with an invoice on their desk today that they need to pay, if the vendor accepts MasterCard, go ahead and pay that with the card. So you can keep your process in place exactly the way you have it set up today.
Okay, the next question is the Orange County piggyback. How was that county's bid awarded? What process was used? Was it based on the lowest bidder for the municipal law? How was that procurement process done in Orange County? Do we have any idea?
Actually, we don't. We don't know why we were selected over other programs. Exactly, except for one thing that was pointed out to us is they were very interested in client service and someone to actually help them grow their program, because their existing bank did not help them do that. And that's where we excel.
Okay, that is true. I did speak to the county about that. I do not think that this program is subject to competitive bidding in the first instance, but that the county chose to put it out to bid. And the county had contacted us after the award was made to say that they were interested in the customer service aspect of this program as opposed to the actual rate itself. That there were many different variables that were used by this team to score and select it in Orange County, but the county wanted to grow the existing base, and they felt that they could do that through extensive customer service. So a good question. Next question, Kelly, is what is the, do we have any further information? I don't believe it was a controller's opinion. The question here is the state controller expressed of interest on the use of P cards. Is there any other guidance that's been put out by the State Controller's Office with respect to the use of P cards?
I'm not sure, Steve. I'll be honest.
Okay. I don't believe the question is more about P cards and credit cards as a form of debt. I don't believe that's the case from this question here. So we will get back to Linda with that answer for this for that question. Another question here that's come in here is the types of rates that are being offered through the PFM NYSAC Payment Solutions Center. How do the counties learn more about the rate schedule for the rebate for various purchases?
Sure. I can give you a few examples today, and if you're interested in joining the program, I could certainly host a private webinar which goes into a lot more detail about the program itself, and it also will give you the rebate schedule. So we could certainly supply that. But I can tell you that if, I'm just going to give you two numbers. It's very clear on our rebate schedule, like I said before. If you spend X, you'll know exactly what you're earning as a rebate. There's no gray area. You do not get a reduced rebate percentage on your large ticket items. So if you spent $50,000 on an item or you spent $5 on a McDonald's hamburger, it all goes into your pool of money. And at the end of the year, you'll know exactly what you're going to earn based on your 12 months cumulative spend, and you can clearly see that on our grid. I'm going to give you two examples. If you spent $5.5 million a year, and I'm sure that a lot of the counties on this call can spend a lot more than that. We typically do see counties spending about 30 to 40% of your budget on goods and services. So we know you're a lot bigger than that. But let's just say 5.5 to start out. So $5.5 million, you would earn 85 basis points. You would receive a rebate check back for $46,750. It's that easy. If you spent $10 million, you would get a check for $95,000 back at the end of the year. And all this is doing is paying your vendors a different way. That's it. You still have to order these goods and services. You still have to pay for these items. But instead of paying by check that costs you money, you're paying by card and you're earning a rebate.
Okay, there are several more questions here, Kelly. Let's go back to Linda Palmer from Chemung asked a question about the use of P-cards, and here's the answer that we believe to that question about P-cards being a form of debt and that they would be prohibited by the state controller. This would not be considered debt because it's simply an accounts payable, no different than a check or any other type of system that's used to make a payment on a service or supplies purchased. There's no interest being paid on it, and it's simply paid within the terms of net 30 days or whatever the terms are for repayment back. So that's why this is no different than issuing a check for the purchase. That's the answer we have to that question. So some other questions that have come in, Kelly, here. The question is, what about vendors that charge a 2% fee on sales? Is there any adverse impact on vendors, such as a 2% fee on sales? Do you have any reaction to that question?
Well, yes. A lot of vendors actually already pad that in to whatever their purchase price is for the item. And if they're already accepting card from someone else, they shouldn't be tacking on an additional fee. So, you know, I don't know why they would, and if we did a vendor scrub for you, we could tell you exactly who's accepting MasterCard today. So they really shouldn't add on an extra fee. But here's the thing. They don't know, the vendor doesn't know who's going to pay him by check or who's going to pay him by card, right? So with that said, I am certain that they already have that padded into the price of the item that you're purchasing. So they shouldn't be charging you an extra fee. Does that make sense?
Okay, yes it does. Other questions are, what if how does a county participate in the program right now? What is the transition process to convert from what the procurement policies are in the county right now? How soon does it take to enroll into this program and have it up and running? What are the steps needed to do that?
Okay. Well, first we would go through a detailed overview of the program, so that would be with me. And then I would submit application forms to whichever county wanted to join. I would walk you through each document. We would go through that together. We could actually go through all the documentation in 30 minutes. I assure you. So it's not that painful of a process. And then once the applications are submitted back to us, we submit them to the bank, and it usually takes 6 to 8 weeks to get cards in your hands. So when it's all said and done, the whole entire process through the bank for the credit review, because it does have to go to the bank, you're going to need to submit 3 years' worth of your audited financials, your most current audits, and the bank does a credit review process. They'll let you know what your overall credit limit will be per month for the county. All of your cardholders combined cannot exceed the overall credit limit of the county that's set by the bank. And that's it. In 6 to 8 weeks, you'll have cards in hand and you're ready to go. So you're ready to start paying your vendors by card instead of by check.
Okay, in the interest of time, we do have several other questions that are online here, but in the interest of time, we are going to conclude this webinar to respect people's time. I do want to say that this program, again, was created by and offered through the association to the municipalities, generally for programs that are underperforming for counties. Most counties, we have discovered, do not have a purchasing card program in place. So that's why this program is generally applicable and widely available to these governments in town and county government. For those counties that have an existing purchasing card program, and there are a few of them, in those instances where that program is working well for their county, we would encourage that county to stay with their existing bank or supplier. But for others that are not working or underperforming, we encourage them, these counties, to take a look at the NYSAC program. And again, this program is not intended and will not interfere with the existing banking services that are being provided to the counties. So let me thank Kelly Smaldone from PFM and all of you for participating. The names on the screens that you see in front of you here is how you can get an individual consult back with you, and we would encourage you to do that. Thank you all for attending. This will conclude the webinar for today. Thank you.